Hi, my name is Luke, and thank you for joining me here, Gambling Investor. We've reached the halfway point of 2026, so we're going to be breaking down my investing portfolio. I'm going to show you all 8 positions and how they're performing so far, as well as how the portfolio has performed year to date, as well as take a peek at how I did in 2025, or how this portfolio did in 2025, I should say. So let's jump into it. First, we're going to be taking a look at the S&P 500. This is the benchmark that I'm trying to beat. It's currently up, let's see, 9.5%. So pretty good. If you don't know, the S&P is the top 500 stocks in the US. And, they say that if you invest in this, you'll over time get about an average return of about 9% or so. 9-10%, I think, is what they usually say. And it's already up. The S&P's been up, I think, for the last 2 years, 3 years. I don't know. It's been doing amazing the last few years. Anyway, so to date, it's already up almost 10%. So let's take a look at my smallest position. It is SOFi Technologies. I have 30 shares. It's an average weighted of 3% of this account at a cost basis of about $16. So I'm up pretty good on this. I bought this about 4 or 5 weeks ago, and we're already up 12%. Am I buying more? Absolutely. Under $20, SoFi stock is an absolute buy. I think they have a long runway in front of them, and I think they're going to execute well. So let's move on to the next one. Another the biggest bank in the US, JP. I have 2 shares. Cost average is about $300. It's almost 4% of the account. I am up 8% with this stock. I'm wishing I probably should have bought more. I don't know if I want to buy more at this level. Let's take a look at their stats. We can see that their forward PE right here is trading at a 14.1, which seems to be pretty in line with how it's traded over the last 6-8 quarters. Their PEG ratio seems to be down, though. So their PEG ratio, if you don't know, is their price to their earnings growth. So what the stock price is compared to how much they're projected to earn. Obviously, they're projected. Anything can happen. JP Morgan's been performing very, very well over the past, forever pretty much. But the past few years in particular, they performed very well. If we look at their price to book ratio, which is another metric people like to use for banks, you can see this one's kind of high. So I'm kind of torn in between this one. I think they got a long run in front of them too. I don't think there's any way that they underperform the market. So I'm probably going to be taking a look at that one. This is the first company that'll report earnings since the quarter's done. We will get earnings soon. I think this company reports earnings in about 2 weeks. All right, so let's move on to the next stock, which is Elf Beauty. I have 10 shares. My cost basis is at 52. We're up a whopping 42%. Should I have bought more? Absolutely. But that's a good feeling to have. I'd rather have that than I shouldn't have bought as much at the a higher cost price. So yeah, we have an average share price of 52, and yeah, it's weighted 4.24% of the account. I don't know if I'll buy more of this. I probably should, but I don't know. I added a few dollars. If you can see down here, I've got $3,000, which is about 17% of the account. So I added a few more dollars, so I'm definitely going to be looking to spend. So I'm going to have to pick which stocks I want to add to. I don't think ELF is going to be one of them. Palantir is going to be the next stop. This is one I absolutely should have already added to. This thing dropped under 110 just a week ago or so. I probably should have added. If you don't know, I had 50 shares of Palantir, and I sold between 150 and 180 or so. This is where the price levels that I sold. So I'm probably going to buy back in at these levels under 150. I think the stock is a total buy. So I'll probably be looking to add to that in the next couple days. It's 10% of the count. I bought this one at a cost basis. It's been my biggest win so far. My cost basis for these 15 shares is $16. So wow. Yes, nothing else that I bought has performed that well. It's absolutely amazing. Stock for me. All right, the next one is Meta Platforms, the beaten up one. This stock has just been beaten up. I feel like it just can't get any momentum. I think it was trading at 650. I want to say it's down. Let's actually look this up real quick. Let's see how much it's down for there. This is probably one that I should be adding to. Meta Platforms, if you don't know, is the Facebook, Instagram, WhatsApp. They make the Meta glasses. Let's see. Let's see. How far are they down? So 15%. Feels like they've fallen farther than that, but yeah, only 15%. So maybe be looking to add to some Meta in the upcoming days and weeks. All right, coming in the, what is this, third spot? Texas Roadhouse. All right, this one has been trading up recently. It's at 197. I own 14 shares. I absolutely love this stock. I am in the restaurant and service industry, and I have been in so for over 2 decades. So I really very, very, very comfortable with these restaurant stocks. I understand them very well. It's very much in my wheelhouse. This stock is actually trading probably at its higher valuation. So I hate to say it, and I've said it before, if I had to sell something, it might be Texas Roadhouse, just because we're trading. Usually 25 of PE or forward PE is pretty fair value. Anything below, you should be adding. Anything above, you could make a case to sell. So let's take a look at its ratios. And let me see. Okay, yeah, here we go. Forward PE of 28 and PE of 30. Yeah, it's going to kill me if I have to sell this stock. It is a growth stock and a dividend payer. So I don't know if I'll be able to sell it, but if I had to sell one stock, it would definitely be Texas Roadhouse. All right, coming in the number 2 spot, formerly the number 1, Amazon was previously my best performing stock, I think like a month ago. So I have 12 shares. My cost basis is under $200. It's 16% of the account. And yeah, we're up over 20%. This one's doing good. I think Amazon just has so much going on for it. They're always just spending money, building out everything from AWS to their retail business. They have an ads business. I mean, so much going on with this. I think this stock could possibly reach $300 by the end of the year. So I could make a case to even buy more at these levels. All right, let's move on. The number 1 stock in my investing portfolio is Touch Brothers. This one was pretty much at the bottom of the list. Before I added ELF, JP Morgan, and SOFi, this has been sitting all year. It's just recently ran up. I actually just made a video about Touch Brothers. I'll leave it as a pinned comment and down in the comments below if you guys want to check it out. So I own 40 shares. My cost basis is about $60. So I'm up almost 20%. A little disappointed that this one ran, to be honest with you. I was really hoping it would stay down in the low 50 range or even below so I can add more shares. It hasn't, but that's okay. It's doing amazing so far. So yeah, that's the whole portfolio. Looks like I've got a position total of $17,400. So yeah, everything's going pretty good. But how did I do for the year? That's what we really want to know. Am I up? Am I beating the S&P? Am I getting my butt kicked? Well, first, let's take a look at how I did in 2025. Guys, in 2025, I absolutely crushed it. If you can see right here, January 1st. So this is the whole calendar 2025 year. And yeah, my return was 27.28 compared to the S&P's 17.8. So almost beat it by 10%. Super happy about that. And yeah, I even beat the NASDAQ. So pretty good. But how am I doing so far? Guys, I am not doing well. A lot better. I've caught up a little bit. I'm actually positive for the year. Before, I would say, a month, 2 months ago, I was not even. Now I'm up 0.5%, but still trailing the S&P, which is close to almost up 10%. So we've got a lot of work to do. I have total confidence in these stocks, and I will be looking for new stocks to buy too. If I find a stock that I think is better than one and has a better risk-reward ratio to one that I have in my investing portfolio, I will absolutely have no problem selling any of those stocks if I think it makes sense and add a new stock. So, all right, guys, if you want to see what moves I'm making next, hit the subscribe button, and I'll see you on the next one.